Hey everyone, Fortinet reported quarterly financial results that sent the stock price down several percentage points following the announcement. Of course, coming into the quarter, I had Fortinet stock rated as one of my top 10 growth stocks to buy and one of my top 26 stocks to buy overall. So you're going to want to tune in to see if I'm changing that recommendation, which I will update in this video. So let's take a look at the results first. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so one of the things I was looking for from Fortinet is a stop to this terrible streak of declining billings growth. And let me share with you what I mean. You could see here Billings growth year-over-year change was at 36.4% in the first quarter of 2022. That fell to 35 in Q2, down to 32, to 31, to 29, to 18, to 5.7. And then we saw an increase to 8.5. And I thought, okay, that's great. The streak is over. It's going to move upward from here on out. And then we got the bad news here in the first quarter of 2024, where the company reported negative 6.4% in billings growth. That's really bad news. Remember, billings are contracts that the company signs, and this eventually turns into revenue. What this quarter demonstrated is the customer appetite for signing cybersecurity contracts worsened. And I was afraid of this trend because I saw early signs of a slowdown in the cybersecurity industry in the previous quarter. Remember, enterprises are so focused on artificial intelligence right now, they're increasing investments in AI significantly. Enterprises, they don't have unlimited budgets. So when they're looking around, one of the areas where they're cutting back on to invest in AI is from cybersecurity. So they've been cutting back on cybersecurity so they can invest in AI. And it's apparent again in this quarter, as you saw, Fortinet's billings growth declined by 6.4%. Revenue increased by just 7.2% in the quarter, the first quarter of single-digit growth for Fortinet going back at least a couple of years, and this too has been slowing down considerably. Revenue growth peaked at, it didn't peak here, but since the fourth quarter of 2022 at 33.1%, it's been following for 5 straight quarters down to 32 to 25 to 16 to 10, and now to 7.2. Several consecutive quarters of slowdown here from Fortinet. So what looks like it's happening now in the cybersecurity industry, I'm still bullish on the industry overall longer term. I think budgets towards cybersecurity will continue to grow for decades as more of our lives are spent digitally. Companies need to spend more on cybersecurity, but instead of spending it earlier and the growth rate being higher over the next 5 years, I suspect the growth rate will slow down over the next 5 years and instead will be spread out over a longer term. Companies will try and extend their investments in cybersecurity, seeing it as like something they have to do, an annoying thing that they have to spend money on because regulators are now forcing companies to have better security measures. And so they're like, oh man, we got to do this now. And it's something that it doesn't boost the company's top line, right? It doesn't help increase sales when you're spending on cybersecurity. It hurts your profitability because now it's an added expense and it's just something you have to do. And companies are dreading it and they're trying to find ways around it and trying to extend it out as long as they can. All right, so the company's operating income of $386.1 million for the first quarter of 2024 was up from $334 million from the first quarter of 2023. The operating profit margin was up to 28.5% from 26.5% in the first quarter of 2023. So those were solid increases to be sure. Looking at its cash flow from operations, the company demonstrated another solid quarter, demonstrating $830 million in cash flow from operations in the first quarter of 2024. And that was up from $677 million in cash flow from operations in the first quarter of 2023. The company did, however, spend $221 million in purchases of property and equipment. This was due to the building of headquarters, office buildings. The company paid for real estate. I would question the timing of this investment, but it was probably long planned, and this was a milestone the company hit, and it had to make the cash payment for real estate. Looking forward, the company is guiding to Billings Growth of negative 1.3% in the second quarter of 2024, and for the full year, just 1.6% Billings Growth overall. So while the first 2 quarters of the year will be negative, the management team expects things to turn around in Q3 and Q4. Revenue growth is expected to come in at 8.7% in the second quarter and 9.2% for the full year. Operating profit margin expected between 25.75% and 26.75% for the second quarter of 2024, and about 27.5% at the midpoint for the full year 2024. Earnings per share expected to grow slightly to 40 cents per share, up from 38 cents per share in the second quarter of 2022. And for the full year, midpoint growth in earnings per share of $1.76. That's up 13 cents or less than 10% from the $1.63 achieved in 2023. So growth rates slowing down in all the key categories for Fortinet. Now, you can see Fortinet year to date, it's still up 2.29% on the year. While it was up more than 20% earlier in the year, it has since fallen to being up 2.29%. It's trading at relatively cheap valuations at a forward PE of 30.78. It is the cheapest cybersecurity stock that I'm following in terms of this valuation metric, the forward PE. Still, it's not cheap when you think about a forward PE of 30 and an earnings per share growth expectation for 2024 at less than 10%. I suspect that growth rate will recover going forward beyond 2024, but 2024 is troubling for Fortinet. Now, as for my recommendation for Fortinet stock, you could see here, it's been on my list of top 10 growth stock and top 25 stock all year long. However, I did highlight that Fortinet was on a short leash ever since the previous quarter when I realized an increase in competitive pressure in the industry. I highlighted Fortinet was on a tight leash, that if I saw continued pressure in the industry, I wouldn't be surprised if I downgrade the stock. And that is what I saw in the current quarter from Fortinet. The decline in billings growth and the forecasted decline continuation signals that the industry is under pressure, and that pressure continues as enterprises look for budgets for artificial intelligence, and one area they will cut back on is cybersecurity. So I am downgrading Fortinet stock. I'm removing it from my top 10 and top 25 lists. I'm keeping it rated as a buy, but it's no longer one of my top stocks to buy. So it's downgraded a notch from a top stock down to just a buy. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.